So given the market condition, it's hard to wrap our head around and believe that this is just temporary. I just saw an article from Wells Fargo that possible correction is coming, and news like that, of course, create fear in the market. But wait a minute, is that what we can call FUD? Because the data I'm seeing points to something else, and that is why I'm buying this FUD or dip. So in this video, I'll show you the other side of things where things are looking rosy and making me believe that we are in treat for the coming days. So let's start with something very simple. And by the way, if you enjoy content like this, which I'm sure you will because I'm sharing some amazing information in this video, then don't forget to give it a thumbs up and consider subscribing. And for more deeper conversation, consider joining our Patreon and Discord. Link is in the description below. Okay, so the last few weeks feels like it's a never-ending dip. And every day we wake up to a news which seems to be more damaging to the market than before. While this is all going on now, at least for us retailers, but looks like someone has had a hunch of what is coming and they are already preparing for it. So let me share some stats with you. So take a look at this chart right here, and I'm going to actually make it very simple for us to understand here. So take a look at this chart. What you're seeing on your screen is a chart of fintech, not a company, but as a sector. And if you notice, we saw a huge influx of money around January of 2021. Right here is January when we started to see the increase, and this was February when it peaked. And the market or the things were so frothy in the stock market. And then after that, by March, people started to take money out of fintechs. Now, we might not see this as we were so focused on individual stock, but look at this chart. Since March, right here, as you can see, the money has been going out of fintech and it has been struggling. So the sector itself after March tried to come back in April, but then we had that May crash and it went down. And then we tried to recover a bit more, but then of course, never came back on the same levels or the February or January of 2021 level. This is damn exciting what we are seeing here. Now let me share some deeper number in this sector and then take a look at the next chart. Will show you what's going on in the market. So as you can see, of course after May we tried to recover, but since then we have been struggling. Even though some of our favorite stocks have gone up and we have seen some huge news covering the market, but overall the whole sector, we have not seen the influx of money that we saw in the beginning of January and February since March. After March it has been on a downtrend, as you can see over here. Now, so this is just one sector I'm talking about. Now take a look at these numbers. So this is a number of fintech right here. So as a sector of a whole, since 11/2020, which is basically November of 2020, exactly a year back, we saw money started to come in this sector. 261.8, after that 752. 791, and then 1846 in February of 2021. This was a huge influx of money right around February of 2021 that we saw. After that, the money has started to slow down in this sector. If you notice, we only got 22.7 points, then 123.7. And then after that, the money started to go out of the sector because there are a few other sectors that were looking more exciting than fintech. And then after that, we had a decline of about minus 352, if you can see over here, and then 62.5, and then 162.2. This is all going negative now. So since February, or I should say, sorry, since July of 2021, right here is 7/2021, we saw this money going out of fintech, and after that, it has not recovered. We haven't had a single month where the money has actually came in to the fintech sector. It has been leaving the fintech sector. And as you can see over here, July, August, September, October, November, and now December, money is still flowing out of fintech sector. So this is just one sector I'm talking about. The story is kind of similar about other sectors as well, except one sector where it's reverse, and I will share that in my next video. So make sure you subscribe and hit the like button, because if you're invested in that sector, then you need to pay attention. Now let me share something which is really going to make you believe that this is just a noise and nothing else. Because everyone who thinks that stock market is going to crash, or if a particular stock, for example, a firm, is not worth investing, then you gotta see this. So these numbers over here, they basically measures long leverage and short or inverse leverage. Leverage means you're borrowing money to play the market. Long leverage means it's bullish. That means people are borrowing money to invest in stock market for the long term. And if you pay attention over here, these are all the months, same from November of 2020, right here, as you can see. And if you notice over here, this was November, then this was this December, January, and then February. Pay attention to February and March numbers. We had some, I'm actually going to highlight this. Pay attention to this box. We had about 2,896.3 of, I would say, long leverage. People, that means borrowed this money to basically be long on the stock market. And then after that, in March as well, we had the same amount where people were piling money or borrowing money to play the stock market because things were looking so frothy. After that, the money has started to flow out. That means people are basically closing their margins, and basically they're saying that, you know what, we think it's too frothy, it's too rich, and we are going to slow down in our buying or borrowing money. Then since October, we had it in minus. Then after that, in November, we saw an increase in borrowing money where people started to feel, you know what, the stock market right now looks good for us to enter. Pay attention, this is December numbers. December, people borrowed 3,216.6. This is the borrowed amount in December alone. That means so far what we have seen, even as bigger as February and March of last year, this is really, really exciting. That means people are feeling as bullish as they were feeling back in January and February of last year. That means we are setting ourselves for a huge bull rally that may be coming. So these are the numbers that you won't find or you won't see them in the market, or the news is not going to tell you. But if you pay attention, all the major hedge funds, all the major bigger investors, or all the whales as we call it, are buying big time this time in the stock market. Because trust me, we are going to see a bull rally come up. Again, timing, nobody knows. For example, yesterday, the stock market has a really bad day. But look today, just after one day, we are seeing some green in the market. So I feel we are going to see a bull rally coming up. And those who are not bothered by this FUD or by this fear are going to gain the most. And of course, in my follow-up video, I'll give you more details on this, what I'm buying and what I'm not buying. But look at this. This is really exciting to see that people are paying attention and people are basically buying, and they are seeing that, you know what, we are going to see a bull run. Because if you notice over here, we have this negative number on the bearish term. So this is bearish. Short or inverse is bearish. We went negative in bearish. But in September, October, November, all these numbers, we have seen that increase. After January and February, you saw this minus number come in here. After that, the bullish number has been in negative and the bearish number has been in positive. And it has been positive since. If you notice over here, this is all positive numbers. And then as we got closer to November is when basically they're saying, you know what, I think this is the time to invest in the stock market. And then it reversed right here in November, where people started to feel more and more bullish. And as we go into December, this is huge number right here. The bearish number is negative 400 and the bullish number is positive 3,216. That means people borrowed so much more money to play in the stock market, including myself. I went in margin for the first time because I know this dip is just too beautiful to pass on. So here is the thing. An informed investor looks for these opportunities, and doesn't matter how hard the going get, we need to keep our eyes on the bigger picture. And when everything is looking too good, and when everyone in your family is talking about stocks and how they made few $1,000s in 2 months, then that's the time to start selling, which is much harder than buying. So subscribe to the channel, because as we cover the dip with research and stats, we are going to cover the selling as well. And if you want these alerts, then consider joining our Discord. Link is in the description, and all who join this year will be grandfathered because we'll be making some changes in the coming new year. Thank you for joining me, and hope I was able to provide you some value. And in a follow-up video, we'll talk about other sectors and industries where the money is coming in and where the money is going out. And I will also share my FUD buying as well. A pleasure to share all of this with you, and I will link my 2022 video here. Do check it out if you haven't. And until next time, you all have a sparkling day.